Good morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 14th of July 2011. Going to be looking at our majors, starting with the Euro against US dollar on our CTC strategy. Let's look at the daily time frame. Right, what we've seen is a huge change in market sentiment over the past couple of days. We've seen price being able to rally above a prior support and resistance area here at 1400. Clearly the candle below, we saw movement 2 days ago really hitting some lows. However, price reverted the upside and closed higher, this confirming almost a hammer formation. Didn't quite close above the 1400 mark, which should have been ideal. However, the next day, huge bullish engulfing, closing well above the 1400 mark. In fact, actually going as high as the prior swing to the downside, or prior support, way up here at just above the 1600 mark. And then Asian market trading this morning, we've seen it trade even higher, even testing prior support and resistance areas this side, just below. Oops, if I could draw a straight line, it'd be great. Let me get rid of that and just draw horizontal, save all the time and hassle. Around about the 14300 mark. And we've seen our price trading at the low end of the wick. This huge move here is been a very strong one against the overall trend, and lots of news out there that seem to favor that. A lot of influence, the higher beings in the market, with a lot of who want obviously euro to be stronger, have reflected that in the purchasing of bad debt, eurozone bad debt, and we've seen price move higher. There's talk about actually lowering the interest rates for some of the countries that are battling in eurozone to help stem this, but primarily we've seen a huge move to the upside, a bullish engulfing, this classical morning star formation. And we've seen price revert to the upside. So if this continues, if you can see price staying above at least the 1700 mark, in this case daily, this prior support here, then we could see further upside movement and a retest of the intermediate trend, which is where we saw the move initially start from. So staying above 1700 for the remainder of the week and growing higher, and then retesting the prior support and resistance level here at 14300 and break higher than that going into the new week, which should see these areas are roughly around the 14400 mark being tested very soon. Look at the daily next on sterling against US dollar, same thing. In fact, if you look at this candle yesterday, this on a daily, we saw price smash the 1600, very strong support and resistance area for this long term. Not yesterday, I think it was on Friday's trading, and we thought, well, this is definitely going to be going further to the downside. However, got as far as the price support here after we had the break of initial 1600 not so long ago in the latter part of June, and then we saw this huge change in market sentiment the following day. Massive up candle, indecisive, bulls and bears finding to find the happy ground, but price action happening at the top end of the candle, and the following day, yesterday's candle, just driving way up. And in doing so, this candle here engulfed the entire 2-3 weeks of prior trading of negativity, this indecision. So now bang, straight up above 1600, close higher than 1600, close higher than the prior support. You can see where price is trading now is the other major support to the downside before we hit the 1600 is this bandwidth here. Support, breakout, pullback, and 1600. So what we need to see price now is trading high above that, and by doing so, you can see price is testing that intermediate downtrend now. So we've got price rallying against the upper end, the underside of this intermediate trend to the downside. It'll be interesting to see what happens at this level. Do we see a consolidation? You can see price action on Asian markets took it right up. However, we've seen European session open, we're seeing it trading at the low end of the wick. If we fail to see price reverting to the higher and closing higher and breaking this intermediate trend line as well as this intermediate support, then we could see price consolidating, and then we could see a pullback of some sort back down here before we see a reattempt. It's got to break higher than this 16, 11, 1200 mark. Close higher. It has to break higher than this trend line, and then you'll probably see the CTC going in our favor. Remember, the CTC is governing this trade, and you can still see we're still in a intermediate trend to the downside. CTC is red on a daily, and as long as we're still trading below this intermediate trend line and this intermediate support and resistance level here, we're going to see consolidation. Have to see a break and close higher. A nice bullish engulfing yet again, confirming that the drive is still a genuine drive to the upside, and then we can actually warrant looking at further opportunities to the upside. Until such time, could see consolidation and possibly a pullback of some sort. Next up is the US dollar Swiss franc. Notice this pair has broken. We've seen it trading lower. We had 1855 being our previous strong support and resistance level that was breached. Pair is definitely in a negative trend, so long term you can see the CTC is well stacked up for further downside movement, and the US dollar has seen negativity. We saw a bit of consolidation range between the 830, the 8350, and we've seen price break through that yesterday. Clear break to the downside, and as it stands now, we've seen the Asian markets going lower. However, going into the European session this morning, GMT, we've seen price action to the top end of the wick. Very negative for the US dollar. You can see where we've come from, and not looking all that great at the moment. Wrong one there. If you take the previous candles, we should see a consolidation range happening soon, and there we could see potentially price pulling back slightly. I have a hesitation roughly around the 8100 mark, which is where price has been to, so we could see a bit of consolidation. Fair to see consolidation in this area here. We would probably see further downside drive, and the CTC, as you can see, we had our red arrow and followed by a move to the downside. So we could potentially be seeing a consolidation occurring soon. There's been talk that there might be the Swiss government might take action in terms of intervention. So we could see consolidation around this area in the next couple of days. So this one over here, definitely need to see that in order to see a potential upside movement occurring. Failure to do so and a close lower than 810 would confirm further negativity, and we should be looking for further shorting opportunities for this pair. The last pair of the day, and the most twitchy of them of all, is the US dollar against Japanese yen. Look at the amount of movement we've seen in 4 days compared to what it's really been like over the past month or so. And 80 has been our strong support resistance level for a very long period of time. And we want to see a clear break below that. You can see that we've been trading in a negative downtrend, a consolidation trend for a number of months. And as I mentioned, we need to see a break, a nice bearish engulfing, and sure enough, we got it. However, there's talk that the yen was going to actually intervene, because it's now trading at levels that we saw prior to back in early March, prior to the earthquake and the aftermath, the tsunami that occurred afterwards. When US dollar was trading an all-time low, we actually saw price tested roughly just above the $77 mark. Sorry, 77 cents mark. It's lower, and this pair doesn't. So I mean, the yen doesn't want to be seeing the US dollar trading this low, and there's talk about the intervention for this pair on everybody's lips this morning. And there's also the need for it to be trading, or the yen to be trading slightly lower against the US dollar, ideally because they're very close allies in terms of import and export, and the longer the US dollar fails in terms of the monetary side and keeping its price value in equal, then you're going to find that it's going to be a bad offset for the US and Japanese yen markets, import exports, which is not what they want. So as it stands now, we've seen a clear break below. Very indecisive yesterday's range. We saw a lot of trading, however, but spinning top formation, and the same goes for this morning. We saw a lot of movement. A lot of this movement in this candle that we saw today on the Asian market session was primarily somebody mentioned the word intervention, and it spread like wildfire, I presume, and there's talk about it. Apparently, word on everybody's mouths, and sure enough, we had this massive spark to the upside. And however, it's kind of progressed, and going into European session open, we've seen it kind of trading within a range now, which is now forming another spinning top. More price action to the low end of the candle, confirming there's more selling. It looks like it's more selling. If this candle closes low to the downside, then you can see that the confirmation is still looking negative, and we could see consolidation. It'll still be consolidating in a range, but a small range there, but it'll still be going to the downside. So if this is to be, if there's word that interventions run, then you probably see, hoping that price will close high, engulfing the prior indecision candle, the spinning top, and then we could see the 80 being retested quite soon. Otherwise, we could be seeing price slowly making its way down to the lows here, because we've now broken this major trend, the support and resistance level, and if it continues, then we're going to see further downside movement for this pair. That's it, guys. Hope you have a fantastic trading day today. Please ensure that you follow the rules of CTC and you back it up with brilliant money management rules. It's great having a whole lot of strategy or templates in front of you that genuinely work, but if you don't back it up with a decent money management, you're just not going to be, you're going to fail at trading. It's simple as that. You've got to be very, very, very good with your money management, and that's got to back up your trading style. So all that remains today is to have a fantastic trading day. Keep it simple, as I always say. Look for breakouts, confirmation breakouts. You need confirmation from the market of where price is going to, and then we just act on that. And if everything's in our favor, using these simple tools that we have taught you, and you back it up with good money management, then you're in for a winner. So keep it simple, and most importantly, trade serenely.